Welcome in PharmD Nation. I know a lot of you understand the importance of Roth IRAs and you know that taking advantage of them for your long-term financial health is really important, but do you really understand kind of the unique details of Roth IRAs that you could take advantage of before you actually get to retirement? Let me explain a little further. Roth IRAs are accounts set up that you contribute after-tax dollars into. I think a lot of us are aware of that, but there are different ways to get money into a Roth IRA instead of just making a contribution. There are contributions and there are conversions, and there's a big difference between the two. Contributions are money you just take out of your checking or savings account, for example, and drop it into your Roth IRA. They have limits you're able to make every single year, which means you can't put over a certain amount of money in a Roth IRA through a contribution in any given year. There are also income phase-out limits that you have to abide by, which means that if you make too much money, you're not allowed to make contributions into a Roth IRA. Now, conversions, on the other hand, don't have the same type of restrictions. When you make a conversion into a Roth IRA, you can do that at any amount. It's just whatever amount you convert into a Roth IRA from, for example, an IRA to a Roth IRA, that's taxable income in that year, so you're just going to want to be aware of that. But there is no income limit that you have to abide by to make a conversion. So you can make $500,000 a year, and if you have $50,000 of IRA money that you want to convert into a Roth IRA, you have the ability to do that. It's just that $50,000 will be taxable as ordinary income in that year that you do it. The other unique feature about Roth contributions is it's money that you can pull out of the Roth IRA whenever you want, tax and penalty free. So if you contribute $5,000 into a Roth IRA and it grows to $10,000 in 3 years, you can actually take $5,000 of that money out, tax and penalty free, and you don't have to worry about any restrictions. Even if it's not for retirement, it can be basically for anything you want. Conversions into a Roth IRA are a little bit different, where you can convert money into a Roth IRA, but you can't turn around and pull that money out and think that you're not going to be penalized on that distribution at all. There's something in place called a 5-year rule, and each conversion you make into a Roth IRA has its own 5-year window. For example, let's just say you contributed $5,000 into your Roth IRA in year 2020, and year 2021 you have an $80,000 IRA out there and you want to take $10,000 from that IRA and convert it into a Roth IRA. So now in 2020 you made a $5,000 contribution, in 2021 you made a $10,000 conversion. So now the total amount of money you have in your Roth IRA is $15,000. Well, you can take out $5,000 of that money and not have to pay any tax or penalty, but you have to wait 5 years from the year you made your conversion in order to pull those conversion dollars out to avoid paying a 10% penalty on pulling that money out. So any contribution you make into a Roth IRA, you're able to get at that money. Any conversions you make into a Roth IRA, you pay tax on that amount in that year. And then anytime you want to take that money out 5 years after the beginning of the year of which you made the conversion, you're able to do that tax and penalty free. So unique situation I think a lot of people could end up taking advantage of this strategy with is to pay for college expenses. A lot of people don't know if their kids are going to go to college and what the cost of college is going to be. But if you have a big IRA out there and it makes sense from a tax planning standpoint to make conversions, if you could start doing that greater than 5 years out, you're going to have the ability to decide whether you want to use that money from the conversions in your Roth IRA to pay for college expenses, tax and penalty free, down the road. But if it's within that 5-year window, you won't be able to use those conversion dollars and avoid that 10% penalty, but you will always be able to use the contribution money whenever you want, tax and penalty free. So just know it's a unique feature when it comes to Roth IRAs. There's a difference between contributions and conversions, and they each have their separate rules as far as you being able to pull money out and spend those dollars tax and penalty free on anything in your life down the line, not just retirement. So if you have a Roth IRA, make sure you're maximizing all the benefits and you understand the unique features that it allows you to take advantage of as long as you play by the Roth IRA rules.